Well, an interesting bunch of results today. Coles has been having a ball with everyone eating at home instead of going out. Sales up 7%, booze sales up 20%, and dividend up 14.6%, but the market thought it would have been better. Westpac said it won't be paying a second half dividend at all, which was a bit of a shock to investors. And BHP rode the iron ore wave to a near $8 billion profit, but it cut the dividend, which was also a bit of a shock. Apart from that, Cochlear shares jumped, even though the company reported a loss because of a $400 million legal bill for an unsuccessful patent defence, which was a bit of a bugger, really. And Treasury Wine Estates got slammed because China announced an anti-dumping inquiry into imported wine. In New York, the Nasdaq hit a new record high and the S&P 500 got to within a bee's digit of its record. And commodities were all strong. Iron ore, gold and base metals all up a fair bit. The Reserve Bank's minutes of the last board meeting came out today, and the main revelation was that the government's fiscal stimulus would add about 4% to GDP in the year just ended and 5% for the year we're in now. Now here's a chart of the stimulus so far compared with what was done in the GFC. So it's $238 billion in total this time, including the states, compared with $75 billion back then. And this one, of course, isn't reckless. The Australian dollar zoomed above 72 US cents today because the US dollar fell. And finally, APRA put out its quarterly health insurance data today, and it turns out hospital treatment claims fell 13% versus the March quarter to $3.3 billion, which isn't that surprising because a lot of elective surgery was stopped. But I guess it'll all still happen eventually, so the health insurers should enjoy the lull while it lasts. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.